Welcome,
Hi,
everybody.
Terry.
So glad to see you guys and that you're here. Hi, Gina. So we're going to get started. Why don't you introduce yourself, Gina?
Yeah, absolutely. So my name is Gina Robinson, and I was here actually for the past 22 years, and I just retired in June. I was the assistant dean and student affairs, and while I was here, I was also participating in Max Money Center and specifically the Community Volunteer Income Tax Program. So super happy to be here. Taxes is one of my favorite subjects because students get money back.
Okay, and I'm Terry Bennett, and I have no resume. No, I do. Just being funny. I'm a social worker by training, and but I've spent the last 25 years leaving behind my social work jobs and went into sort of financial counseling, coaching. I've been at McMaster also for about 8 years, also retired when Gina did, and now we're just back to support Max Money Center in these webinars or in these workshops and whatnot. So glad to have you here. And I was
That's my freedom
coach.
picture. That's my freedom.
That's your freedom question. Yeah, and I actually was the money coach here when I was actually here, and so I still do see individual students as well as do these workshops. Okay, so let's go on. Why don't you say what the agenda is?
Yeah, absolutely. So here are some of the main topics that we'd like to cover today. So just kind of going through an overview of taxes. So kind of getting us all to the same level of knowledge. So it really is a taxes 101. And really, we're going to be talking about issues that impact mainly the students. Okay, so it's not a comprehensive tax course, no worries. As well as residency status, which is really, really important for international students. Some of the tax benefits and credits that you can expect to be receiving your CRA account. So I'm not sure if folks have a CRA account, but you know, it's really recommended that you do. So we want to talk a little bit about that and tax scams. So tax scams, very popular at this time of year. So we do want to put you on a scam alert. And lastly, a lot of services that are coming up to support you in your taxes.
Okay. So let's talk about what are we hoping to get, or what we hope you'll get out of this. One, we want you to realize that taxes aren't scary. We want to take the scary out of tax. And I think this workshop webinar will do that for you. We're going to teach you some lingo, some tax lingo. Bear with us. It's not the most exciting pieces of information, but important pieces of information, you know. Want to make you smile, put some money into your bank account. You'll love that. There can be up to like over $1,000, sometimes more, depending on your situation. So stay put and figure out how you can make sure you're a recipient of this money. We'll talk about some myths and some truths about the tax system. We want you to be a really smart international student and really understand the Canadian tax system. And we want you to have some fun, okay? So we'll try to make it as fun as we can. It's not the funnest, most fun, but we're going to try our best.
Actually, it is. It is. We're going to have fun.
Well, that's because she loves.
We're going to play Kahoot at the end, okay, guys?
Yeah.
So just bear with us.
Yeah.
All right. So I'm going to do the taxes 101. Okay. So you're going to hear some of this lingo. So for those of you that it is your first year, I don't know who we have here, but it would be nice to sort of, I don't know if you want to share that information. But if you are if you're kind of seeing this for the first time, Canada Revenue Agency administers the tax laws here, okay? And that stands for, that is known as, and I'm just going to turn off my phone, CRA. Okay, so if you ever hear CRA from a tax perspective, it stands for Canada Revenue Agency. And we don't fool around really with Canada Revenue Agency. But they administer the tax laws on behalf of the government. And if you've been here, you'll see that the government is collecting various taxes and various amounts relating to the taxes. So we have a federal government here, we have a provincial government. Sorry, I'm losing my voice. And for those of you that are working, earning money, you will notice that there are tax contributions coming from your paycheck. Okay, and if you have a T4, have a look at that T4. And if you look in box 44, you'll actually see the amount that has been sent to the government on your behalf from your employer. Okay, we also have other taxes. So for example, GST. So when you're going into a store, you'll notice that you are being taxed on certain goods and services. And the GST portion is 5%. And that actually goes to the federal government. Okay, so we've got these two levels of government that are both responsible for different programs and services, and they're both collecting money. Okay, and CRA is administering it for them. Okay. There's also, actually, I had revised this later, Terry, there's also sales tax that is collected from the provincial government. So you'll notice that if you go in, you're actually paying 13%. So this 5% is the GST, and then you've got 8% that's going to the provincial government. And again, it is for various services that they are each responsible for. If you were to own a house here, you would pay property taxes, and that would actually go to the municipal government. I also put down here some mandatory deductions. And again, if you have a T4, you'll see these: Canada Pension Plan, CPP, and EI. And I refer those as kinds of taxes because they are mandatory, okay? And so they will come off our paycheck, and they're being sent to the government to fund employment programs, as well as if you were to retire here and stay after your schooling. In fact, you could be eligible for some support when you turn the age of 60. Okay, so we've got all these taxes being collected. Sorry, one more. If you go to the gas pump, our fuel costs also includes a component of tax as well. Okay, so you've got all of this money going into, being sent to the government, being collected by the government, and those funds go to provide benefit and credit programs. Okay. And I should have said to residents, not to Canadians, but to Canadian residents through the tax program. So the tax year is January 1st to December 31st, and we are actually just starting to prepare taxes right now for everybody. We're all set up, and the filing deadline is April 30th. Okay, and if it falls on a weekend, it's the next working day.
That should say May 1st.
Oh, it should say May 1st. Yes,
Yeah,
yes.
it should say May 1st, sorry.
We'll correct
Yeah.
that before we send it out. Okay, so I just would need everybody to understand that. So when we're doing taxes as of April 30th, we're really covering January 1st to December 31st, 2022. Okay. Here in Canada, we call our system a self-assessment system because really we are assessing our own taxes. Okay. Based on our income and based on any receipts that we have. We do not send any documentation to the government, okay? There's lots of software that is available, and of course we can help you, or there's paid providers, which we don't want you to go to, by the way, that will help you determine what your taxes are. And you just keep your receipts, and if the government asks you for, for example, your tuition form, sometimes they ask for rent, then you would send it to them, but you do not send anything to them unless they ask you. And in terms of deadlines, we've been asked before, hey, it's past April 30th. Am I still able to do my taxes? Like I didn't do them last year, I meant to, or whatever. And the answer is you can file taxes anytime. In fact, you could go back and file taxes for 10 years. And what's important is that if you don't owe any taxes, And in fact, you're eligible to collect these benefits and credits that we're going to talk about. You know, you want to file by that time so that you can receive those, but there's no penalty. However, if you actually owe taxes and you don't file at least by the deadline, you'll be assessed a penalty, okay, for not doing so. So for those of us that might be in a taxable position, that April 30th deadline is really important.
But most students typically aren't in a tax payable situation, right? Yeah,
No,
most students are not.
absolutely not. So yeah, we can help you anytime. Okay.
Okay. Okay, so really important part for the international students is this next sentence, okay? So when you file taxes, you are not using your immigration status. You're not looking at that as whether you're eligible to file or not. So we're not looking at your immigration status. We are looking at your residency status. Have you been in Canada, or will you intend on being here longer than 6 months or 183 days out of the year? And as long as you meet that criteria, you are considered a resident of Canada for tax purposes. Okay, so not immigration status, residency status. It is really much more advantageous if you have a social insurance number to file. Hopefully most of you have it. If you don't have the social insurance number, you can apply for an individual tax number. It's a form here called T1261, can be found under this in the CRA website under forms and publications. Okay. So again, just a tip, make sure you file by the 30th so that you don't get delayed in getting any of your benefits that should be coming your way.
Okay, so I don't know if we have any married or common law partners in this call, but this is very important if you are. And even if your partner does not reside here, okay, we still have to address or include that partner when we're filing your return, okay? And the reason is because we're actually looking at benefits from a family income perspective, okay? So they look at the family income, so it would be yours and your partners together, and the government looks at that amount and then calculates how much benefits you're going to receive, okay? And quite common, the partner is not here, like the partner is abroad, the partner is still at home, and that's fine. We still have to record your partner's name and information about your partner and still identify whether, you know, how much money or income your partner is earning. Okay, and that's not because we're going to be taxing. The government is not going to be taxing you on that income. No, absolutely not. But they will look at that to ensure that, you know, to properly calculate the benefits. So the way the system works, you know, the way the system works is the less money that individuals or families earn, the higher the benefits. I hope that makes sense. Okay. Also, children are considered dependents. So if you do have children and they're actually residing with you, and we can talk a little bit more about this. If there is a specific situation, we can look at that. If they've been living here with you, we can classify them as dependents. If they've been living with you for more than 18 months, you could actually claim Canada Child Credit. So that's very important as well. Okay.
Before we move on, sorry, we did get a question
Okay.
regarding the residency piece. So a few slides back. So we have someone who came to Canada late December, and they didn't really start any jobs, didn't have employment until January. Do they still file a tax return for 2022? I see.
Yes, absolutely. So just in terms of the residency piece, came here on December 23rd. So as long as they're coming before December 31st, absolutely. And if they're coming in with the intention that they are going to be, quote, staying for, 6 months. And the other piece about residency status is you are establishing ties here in Canada. Okay, so if you're coming, you have an apartment, you're planning to go to school, you are establishing those ties, and therefore you are considered a resident. You're not here on vacation. So, it's different if you came on December 31st and you were going to leave in February or something like that. Regardless of whether you have a job or you're earning income, you still file a tax return so that you could obtain benefits. So those are one of the myths. People say, you know what, I don't have a T4 and, I didn't earn any income. So, quote, I don't have to file a return, right? And the answer is you should file a return. Okay, it's not against the law to not file a return. Okay, it's not illegal here in Canada not to, but you would not be receiving your benefits. Okay, so you want to claim as much benefits here as you possibly can. And the government includes you as a resident for tax purposes because you're here, you're renting, you're spending money, you're going to the store, you're part of our economy here. So that's why you're included. If you are here less than 6 months and
Like an exchange student or something, Gina? Like,
yeah, Stephen, are you,
like
yeah,
someone
and
who's just here for like a short, like just
If-
for a couple months to do some research or something?
yeah, if you're here just for 6 months, no, unless you actually have a T4. So I just came across this the other day. I had an exchange student who had actually worked and they had remitted taxes of like $250. So I said, you should file a return because you can get that $250 back. You won't get any benefits because you have an established residency. In fact, you cut those ties. So I hope that answers your question.
Okay.
Before we move along, so there is another question about dependents in the Q&A section. So the
Yes.
question asks, does my sibling's child staying with me count as a dependent, or does it have to be my biological child?
Okay, so we would have to look at that. Are they in your care? Are they living? Are you looking after them? Is anybody else claiming them? So I think we kind of have to find out more about that. But yes, absolutely. If you are the caregiver of this individual, then yes, you can, claim, quote, that you have a dependent living with you there. So I don't know how old this dependent is, but if this dependent is just like visiting, oh, I'm going to come for like 3 months and visit or whatever, then no, this person has to be in your care. And the government could, in fact, ask you for some, proof of that. And sometimes the proof could be a letter from the school saying, yes, this person is coming to school. Yes, this person lives in this address. Okay. So we'd probably have to just find out a little bit more information, but no, they don't have to be your actual child. It could be somebody who's in your care.
Perfect. And on a related note, another student, so would they include their children as dependents if they're not living in Canada with them?
No, they would not.
Perfect. And then let's move on to another topic, back to residency. So just to confirm, do they have to file their tax returns if they arrived in January 2023?
No, they'll file in 2023.
You're always filing for the year that's already passed. So if they come in January 23, you won't be filing until this time in this sometime around now in 2024. Okay.
Perfect.
You're always back. Just one other 2 points, Gina, that when you file as an individual person, even though it's family income and it's seen as a family, you do prepare your own, like
yes,
your own information is going into the file. And so when you do get benefits, the benefits that are based on family income, one person in the family gets it. You both won't get it. So one person will get it. And the idea is that you share that benefit with the rest with your other partner. And
absolutely. Yes. Yeah. And it just depends, when you press that button to e-file that return, whichever partner that is, that's the person that's going to receive those benefits, okay? So anyway, there's a little bit of strategy there, but I know that everybody here is going to share. So that's really good. But yeah, this can be sometimes confusing. So yes, we have to assess partners or married relationships together, and we prepare them on the same software, believe it or not, because there's a little place for a partner and then another partner. But when we're actually sending it to the government, we send one per person.
That's what we mean by doing it individually, but all the benefits are calculated on the basis of both people, right?
Yeah. So if you do have a partner and you come to our tax clinic, please bring your partner. That would be very helpful, okay? Because we'll need that information. All right, this is some other stuff. Okay. You have to claim revenue and expenses for the year that you received the income or incurred the expense. So I'll give you an example of that. Like some students will say, you know what, I forgot to claim my T22 last year. So can I just put it on this year's? Can I just include both of them this year? And the answer is no. But we can actually go back, okay, and file your 2021 return. Or likewise, if you forgot like a T4 or a T4A last year and you just missed it, oh, can I just include it this year? The answer is no. So but we can go back and adjust any previous year's return. So if that, if that situation pertains to you, just let us know and we can fix that for you, okay? I talk about moving expenses as well. So this is another very common question that we get. Moving expenses, okay, so that would be your air flight, it could be, accommodation, any kind of transportation, food, while you're getting here, and you are moving within 40 kilometers of either your place of employment or, in this case, your educational institution, okay, you are able to record or claim these moving expenses, okay? Now, this will be important if in the future you were to receive, or you potentially could be receiving it now, a taxable scholarship. All right, it cannot be used as a deduction against a T4 if you have a, if you're doing a TA ship or whatever, because I think you get a T4. So a lot of students be like, well, I probably won't get a taxable scholarship. So my advice is, you don't know if you will, like potentially you could, end up in industry and you could be potentially getting a taxable scholarship to do research. Just record it. It doesn't hurt to record it because you will be able to carry it forward. And if, you're able to use it, that would be great. Okay. So that would be my answer to that. Medical expenses as well. So medical expenses include any UHIP premiums that you pay, so any related premiums, and out-of-pocket expenses, okay? So not for amounts that are reimbursed through your grad studies plans, your dental and your, all right? So that's another important deduction as well. Okay.
So Gina, before we move along, sorry, another relevant question from our Q&A. What about rent?
Oh, rent, Terry?
Well, yes, rent you can, but we're going to talk about that in just a bit. Let's hang on to that question until we get to some of the other benefits, okay? But yes, you can claim your rent.
Yeah, well, rent is a big one, okay? So again, we're still on taxes 101, okay? So we're just kind of like throwing out all these fun tax facts, right? And you don't have to sort of memorize them, but hopefully when we talk and explain the benefits, it will be more meaningful for you. Mm-hmm. When you do your tax return, right, you'll see a line called income tax refund or payable. And we just wanted to explain that that's actually different than a benefit, okay? So a benefit, the way I like to explain it, is it's free money from the government, okay? It's free money. Whereas getting a refund means that you overpaid in the first place. So for example, the T4, and I'll use that exchange student I met with the other day, that exchange student paid $200 in tax through his T4. Well, when he actually does his tax return, so the tax return is like, the final reconciliation of taxes, if you like, right? The employer just sends all this money, but at the end, what we need to do is do our tax return to verify the amount of tax. So therefore, that person would be getting $200. But that's not free.
Can I just step in for 1 second? Just to make it very clear to the students, a T4 is something that your employer gives you when you've worked. And it basically is a document that you get, and generally they all should be to you by February 28th. So all of you who've worked in 2022 should have something from your employer. It's called a T4. It outlines how much money you made in total, how much went to all the deductions that Gina mentioned, Canada Pension, employment insurance. So when we're talking about a T4, it's a slip that you should have gotten if you worked. Okay, that's what a T4 is. I just don't think we've explained that yet. So I just want to make
that was like another lingo. But yes, if you worked, it's an employment slip. And people say, why is it called a T4? Absolutely no. We have no reason for what they're called. Why is a tuition slip called a T2202? Who knows? But these are very common slips that you will, you'll learn to know what they are. But T4 is very common, yeah. And if you have a TA ship, you'll get that. You can file back to 10 years. So again, the government, which is great, the government allows us to go back 10 years and collect every single benefit and every single refund. And in some situations, we have students that are here 5 years and they never file, and we can do 5 years for them, okay? And I think somebody had asked this, but no, you don't have to have income to file a tax return.
Okay, so we're back to residency status again, just to really sort of highlight, because this is so important for all international students. So you are filing, your requirement to file is based purely on whether you are in this country for 6 months or more or intend to be. So if you come in December 23rd, but you're going to stay for maybe a year, 2, 3 years to finish your degrees, you are obviously, even though you just arrived maybe a week before the end of the year, yes, you are still a resident of Canada because your intention is to stay for, longer than 6 months, okay? So international students are considered residents of Canada for tax purposes, and you are entitled to all the benefits that we're going to talk about in just a few minutes in the same way that anybody who was born here or as a permanent resident of Canada would get. So it's really
it's awesome.
It's awesome.
Fantastic. It's really good. Okay, so this is important, okay? If you are a newcomer, new resident in 22. So we had somebody coming in 2023. I think it was Akasha. If you're considered a new resident, okay, you must apply for the benefits through this form called RC 151. Okay, that's separate from the tax return process. So if you go to that link, you're going to see this form. It's called RC 151, and it's called Application for GST and HST Benefits. Okay, so all you do is need to fill out that form. It's quite simple, and it's going to ask you how much money did you make in your country prior to arriving to Canada. For example, the December 23rd. So, and you could just estimate it. You don't have to provide any proof, but you just have to estimate it. And again, the government's not going to tax you or try to take away money from you, but they're just trying to determine how much benefits they're going to actually pay you. So, which is pretty cool, because if you come even December 29th or December 30th, you're going to start being eligible to collect actual benefits commencing July 1st, 2024. But if you came in January 1st, you're not eligible to collect until the following 2025. So you know what? Yeah, I was just thinking about that the other day, right? I was like, oh, you know what? You better not wait till January from a tax perspective, because you can actually start collecting, benefits a year earlier. Yeah, so anyways, so hopefully that's clear. If you do have any questions though on that form, just email us at money@mcmaster.ca and we'll answer them. And
You know what we could say, Gina, sorry, but
what?
we have 4 financial
Oh,
literacy peers
yeah.
that were working for us now. So
Yeah.
they are all trained. So if you have an adjustment that you want to make from a previous year, you forgot something, you need to change the amount, whatever the issue is, you can actually book on Oscar Plus to one of these 4 trained students that we have, work study students, and they will help you with these forms. They can do an RC 151, could they not, Gina, as well?
Oh,
with
yeah,
them?
absolutely. And
So
the
they
other one
can
is
do-
register for a CRA account, or
Now,
if you don't, if you have one, but you don't understand it, you could also book an appointment. I love the online CRA account. So you can open one as soon as you file a return. Okay, so if you are first year, and you come to see Terry and I, like during one of our tax clinics, we'll be letting you know right away, okay, as soon as you file, you can sit down and actually register for your CRA. It's wonderful. It's paperless. It, provides you with a one-point access to all of your tax information. You're welcome, Akash. And yeah, so I really encourage everybody, if you move, you can update your address, you can update your bank account. Like, it's wonderful. You know exactly when your checks are coming in. So it really, really is good. It's like an online bank account.
And
So
and
before we
also,
move- oh, sorry.
just to mention, if you do have children, there is the form you're going to be filling out is the RC 66.
Yes.
So if you're coming alone or with a partner, you can do RC 151. If you're coming with children, you do the RC 66. Okay.
Yes.
Perfect. So
Thank
before
you.
we move along, we do have a relevant question just from a few minutes ago. So if someone arrived in late December 2021, so that's 2021, December 28th, let's say, will they still be considered as a newcomer or get the newcomer benefit? So that's
Yeah, you know what? People ask about a newcomer benefit, and I don't know exactly what that is. I don't know how they're marketing that, but if you came in 2021, so it sounds like you came at the end of 2021, you can actually file a return for 2021, right? Because you came before the end of the year. Okay, now you could also file now for 2022 because you're still here. So in fact, we could file 2 years for you, and yes, you must still fill out RC 151 because for 2021, right? And it'll ask you like, when did you enter Canada? So you'll put December, whatever, how much did you make, in that year? So yes, you still have to file that return, fill out that application, okay? But come see us because we could do your return for 2021 as well. Great question.
Okay, on we go. Okay, here we're going to talk. Here's some of the slips that we have been talking about, and I just want to go through them and make sure there's some lingo or just some
Oh,
technical
there's the lingo.
stuff. Yeah, here's the lingo, and just want to make sure that it's clear. So the T4, I already explained to you, is coming from your employer, and it will outline whatever the employer has done. So the total income, the benefits that have come off you, they have taken off you for the year. Okay. Now a T4A is also going to deal with some of the money that you've had coming into you, but a lot of these things are not going to be, not all of them, but a lot of them will not be taxable. So typically the scholarships that students get are not taxable, nor are the bursaries. So rather than calling it really straight income that will be taxed, like the T4, they name it the T4A, and it's for your scholarships and bursaries. Your T4A is going to be able to be found on Mosaic. along with your tuition receipt, your T2202. So both of them, we're going to show you, I think, in the next page or two, how you can actually find, if you don't know, we'll go through that in a minute, where the T4A and the tuition slips are. Now, if you've been investing some money in one of the banks here in Canada, or credit unions, whatever, financial institutions, and you have some income that was made from the money that you had in a high interest savings account and maybe a GIC, if you've invested in any investments in the stock market, any investment income, you will get a T5. That will come from your bank or wherever you did the investment. Just what's happening with some of the banks right now is that they are not mailing you these T5s. They are simply in the mail in your, if you've signed up for electronic documents. So you don't expect maybe that you're going to look for it in the mail. I know TD is still sending them by mail, but I know some of the other banks are doing it electronically. So when you're getting all these slips together to bring to whoever's going to do your tax return, or you're going to do it with us in a do-it-yourself session that we run, make sure you check your banks, the mail that they may be sending to you, and make sure that there are, you bring those slips, you print them out and you bring them with you. Some of you may be doing some self-employed income. You may be driving for Uber. Maybe you're doing some tutoring with some of the tutor companies that are out there. Anything that you have some self-employment, that would be considered self-employment. You're not really staff of Uber. You're not really staff of the tutorial, the tutoring something company. But it's still income that you've made. You have to report it to Revenue Canada. You'll be filling out a form with us. It's on the software at T2125. We'll help you fill that out. But if you've had some costs associated with doing that self-employment, so maybe you need some of your, you use your cell phone to communicate with whatever, with whom you're dealing with. You might have gas for your car if you're doing driving. So do keep track of all the receipts that you may have incurred to earn this income, and do keep track of the money that you've made from these businesses, because you will need to have some documentation that the government may ask you. Again, you won't send it with the actual filing, but they can always come back to you for 6 additional years after you filed and say, show me these receipts, show me these income statements. So please make sure that you're keeping these this information. Typical other receipts we talked about, yes, the rent. If you've been renting in Ontario, you can actually get money back through, it's called the Trillium Grant or the Trillium I don't even know what they call the Trillium Benefit. You will need to keep track of your rent. So the important thing about rent is that you must be able, again, if they ask you, to have to prove it. So you need to, I would recommend highly that you do not pay rent in cash. There would be no way for you to prove that you paid your rent. You need to do it through a pre-authorized payment, canceled checks, some way you need to be able to show that it got paid. And having a lease isn't good enough. You actually have to be able to show that the money was actually taken out of your account and given to someone else. The lease says that that was the deal, but that doesn't mean you did it. So a lease is not good enough. You need to have the dates that you were living in this particular rental property. You need to know who the landlord, who you've been paying, the landlord or the management company that you've been paying. You will have to have the address and postal code and the amount that you paid over the course of how many months you were actually living in that particular place. And so you will get a small amount back from the government to sort of support the fact that you paid rent. Again, all these receipts, there's medical receipts if you've had as Gina said, out of pocket. So maybe the dentist charged you $100, you got $80 from McMaster's plan, but there was a $20 overage that came out of your own pocket. You need to keep that, and that can be a medical expense. Also, what you pay for UHIP, that will show up. I think on your tuition. Will it show up on the T2202, Gina? The
But
UHIP cost, the UHIP cost. I don't
no,
know.
it will not.
but-
No,
No,
but
but
it'll
we'll
show
know it.
up in there. It'll show up in your student account. So
In your
depending
student
on
account,
what your premium is based on, family or individual, yeah, you'll
Right.
get it from
And-
there. So look in
Okay,
your
we'll
student
get it
account.
from there. Yeah. So you'll also be able to write that off as an expense if you've given money to any charitable organization, to a religious institution, to, you know, a favorite charity of yourself, medical or environmental, whatever. Gina's talked about the moving expenses already. There is an employee working at home now expense. That's a relatively new one that started during the pandemic. If you are working from home, there is, I think, a top limit of $500 that you can use as an expense off your income. And it's just based on so much per day. And if you've worked a whole year from home, it works out to be $500 a day. There is a formula that we can help you with if you're, you know, wasn't the whole year. And if you have a disability, there is a disability tax credit. So these are just the various things that impact your how much what your income and what your expenses can be, and what may help lower the taxes payable if you happen to make enough money to pay tax. Okay, shall we go on? Do you want to add anything to that, Gina?
Yeah, I just want to talk about tuition just for a minute, okay? So in some cases, and I know international students, obviously your tuition is quite high. So, you know, we get the question like, what is the benefit of, you know, recording this tuition, right? And obviously, depending on how much money you're making, so on your, you know, TA-ship or whatever, you might use part of that deduction. But anything that you don't use will be carried forward to reduce future taxes. I'm just going to give you an example, okay? And I'm going to use really simple numbers, okay? Say at the end of your 3 or 4 years that you're here, you accumulate $100,000 worth of tuition, okay? That you didn't use to offset other income, okay? You made very little income. You know, and so you didn't use it. So you had $100,000 left over. Okay, so you're with me. So that's called a credit. And so basically, if you get a job in Canada, so this is really a great incentive to even stay. If you get a job in Canada, the government will allow you, okay, because you spent $100,000 in Canada educating yourself, and you were here all that time contributing to our economy and our growth, they will allow you to take $100,000 and just times 15%. You're going to say, why is it 15%? But that's what it is, okay? It's the lowest federal rate. But if you take 100,000 times 15%, you get what? 15,000. So that's awesome because your tax liability will be reduced by 15,000. For example, if you're working at a company and you're making $75,000, and on $75,000, you know, you're being assessed $18,000 worth of tax. Now stay with me after all your deductions, okay? You're being assessed $18,000, but you now have this $15,000 credit. Right? So the government's allowing you to have this benefit. So this will reduce that liability. So the net liability is 3.
So you'd only be paying $3,000 instead of 18. And if you
Which is
had
amazing, which is amazing.
And if you had it already deducted from your paycheck, you will get $15,000 back as a refund.
Yes.
You didn't have to pay it. So it is a fabulous
It's a really nice to know. Yeah, it's a nice to know. So yeah, if you're in that situation and you graduated or you're about to graduate and you're going to be still working here and you want to talk to us about it, that's no problem. Okay, next.
Okay. Do you want to tell them how this works, Gina?
Oh God, I don't know. I mean, essentially, this is what they tell me. UFE probably knows better than us, but if you do have any issues finding slips, and I've gotten quite a few emails from folks, just contact the registrars. I don't know how it works with UFE, but UFE, do they still just contact the registrar's chat line if they don't find the slips in their accounts?
Yes, if they don't find slips in their accounts, please contact the registrar's chat line. And if they don't find the correct slips from their employment, then then students should contact HR.
Just regular HR?
The general HR, and I believe they'll triage the emails depending on the student's department.
Okay, perfect. So one of the common questions as well, students will write in and say, they've got the wrong SIN number. So on my T2202, so that's the lingo. I hope everybody knows that's the tuition, that's the tuition form. So try to remember that one, T2202. Sometimes they'll have 000 whatever because they didn't have your SIN number or you didn't communicate that SIN number to them. Okay, and so students will try to get the registrar's office to correct that because it's like, okay, this is not my SIN number. They will not issue a revised T2202. Okay, so I'm letting you know that right now. It's not a problem when filing your taxes. We can still claim that amount. Chances are the government will probably write you a letter and say, hey, can you send me a copy of your T2202? And it will have your name and it will have the institution and the amount of, and so they'll match your name and they will allow the deduction. Okay, and this happens really quite often. Okay, this is a very so not to concern yourself with that. And when and something that they started to do about 3 years ago, Terry, I don't know if you know this, but they started to send, so the institution, for example, like McMaster or any other educational institution that issues T2202s, okay, must issue a copy to you and a copy to Revenue Canada. Canada Revenue, right? So basically, they should have a copy already in your CRA account. Just like the T4, right? Whenever we earn income, the government knows about it, okay? The government knows about it. Because the employer has to send a copy to you and send a copy to the government, okay? So it's in your CRA account. This is one of the best things because you could actually look up all your slips. But if you had the wrong SIN number or no SIN number, the government's not going to be able to attach it to your CRA account or your profile. So when they go check, right? Because it's based on a self-assessment, but hey, the government's going to check our return. Okay, they're going to check us and they're going to send us back a report card, which I call the notice of, which is called the notice of assessment. But for me, it's like a report card, right? So they'll send that back and they will address that, hey, we need to see a copy of your T2202 because it's not sitting in your actual profile. It's not sitting in your CRA account, okay? So just keep that in mind, that you'll probably get a letter and don't stress over that, just send it to them.
Okay, tax benefits, free money. So
Hey,
this
Terry,
is
before we move along, we
sorry.
have a question relevant to an earlier slide about rent.
Okay, thank you.
Imagine a lot of our students are in the situation where they're renting with their friends in one house, and one of the students pays the rent to the landlord, but everyone kind of pitches in rent. So in this situation, so if that one student pays via e-transfer to the landlord, what do the other students do? Can they use the student who paid e-transfer statement as proof of payment? What happens? What can students do in this situation?
Yeah, you know what, I remember that's a tough one because what we're trying to really encourage students to do is pay directly to, like, pay their own share to the landlord so that there is this completely clear line between what I paid. I mean, I guess you could try giving a lease and then show how much the total amount was and then get a copy of the total amount paid for the whole year and then sort of show them that this was your part and your name is on the lease. But I think it would be, you're going through a lot of hoops, to do that, to try to explain to them that you are part of this bigger rental monthly amount. So we encourage you to pay directly to the landlord your share. And so if there's 4 of you in there, then each month there's 4 remittances going to the landlord that adds up to the total monthly amount. That would be the easiest thing to do.
So yeah, that would be easy, but a lot of landlords, they just want to have one lease and for their own tax purposes and legal purposes, okay? Because there's different, you know, bylaws when you're renting. And I think if it's 4, it might be considered a lodging home or something like that here in Hamilton. So without getting into that, sometimes the landlord won't do that, right? So I think though Terry's you know, Terry's suggestion is a good one. What I might recommend doing, hopefully the landlord will go for it, draft your own receipt, okay? Saying, you know, put the address, put the total amount that was received. So it's like $4,000 a month or whatever you're paying and you're each paying 1,000, but put the total amount and then put each of the individuals' names, so the 4 of you, and the amounts that you each paid, and get the landlord to just
Sign it.
authorize that.
Yeah, sign it.
And
Could you-
I've seen that, okay?
Yeah,
So
I
I've
can.
seen that where a landlord, so not a private landlord, but a corporation, issues receipts, and they'll have the 2 names on the receipts so that both people can claim that rent and get a benefit. Because essentially the only other way, and if they say, no, I'm not doing that, no, because sometimes they get quite stubborn, is what you can do is whoever claims that rent, okay, they're gonna get the benefit. And you split it 4 ways. You look at his tax return and be like, hey, you got $950. So you each owe us, you know, $250 each. Is that a good one? That's
Yeah,
the other thing I always recommend. And if you're friends, it'll work out. But try that, try drafting it. Don't explain to the landlord what you want. You actually draft it. So you put the date, you put the tax year, you put
Yeah,
the
the
landlord's
amount of money.
name, you put the address of the landlord. You say, this is to certify that because you're pretending you're the landlord, I received, you know, $4,000 a month for 12 months and in total of and was paid by number 1, number 2, number 3, number 4. And you say, just sign this. Thank you so much. Okay?
Thank you. Those are great suggestions to a very complicated situation. That
Yeah,
I'm
it is a
Very,
complicated one. Yeah, it is
Yeah.
complicated. And if we can get people ahead of time, we would say just do it yourself, but you can't sometimes. You won't even know who's coming in if you're living in a house with, you know, a bunch of strangers and you're just renting a room, so it's tricky. Anyway, let's just go over this free money that you're going to get. As Gina
and
said,
everybody get your calculators out.
that's right. So GST is the 5% that Gina was talking about of the 13% that you pay on on so many items in this province. So GST, the federal portion, 5%. If you're an individual, you would end up throughout the year. They get paid quarterly. So this would be divided in 4 equal payments. You would totally get $467. If you are married or in a common law union, you know, whatever the partnership is, you would get $612 over the 4 sessions for remittances, whatever. The Ontario Trillium Grant, that's the rental part. Well, actually, there's 2 parts for the Ontario.
There's 2 parts to that, yeah.
Yeah,
And that's
there's 2
another
parts.
lingo, guys. When somebody says OTG, they mean money from the Ontario government. Yeah.
And so one part of the Ontario Trillium Grant is the rent, and the other part is the 8% of the provincial portion that makes up the 13% that you pay. So 5 to the federal government, 8 to the province, 13% you pay. So this is getting money back for the 8% from the provincial government, and the fact that Ontario is also giving you some help with your rent. So if you, and this is a harder one, these are sort of the maximums. It depends on your rent, blah, blah, blah. So this isn't what everybody is going to get, but this would be more like the max. For the rental portion, you could get up to $929. That goes out, you can get it in a lump sum or you can get it monthly. You'll get a choice of how you want it. And $345 would be towards the Ontario sales tax portion. That's as an individual. And then as a married couple, it's the same rental. The maximum is the
Yeah,
same.
the rent is maximum.
same,
Yeah,
yeah.
absolutely, Terry.
Yeah, and the 690 as two people, you would get, that's for the Ontario portion of the sales tax again. So there's quite a bit of money just from those two
So-
alone. If you've been here for the year, 12 months, you would get the Climate Action Incentive Grant, which is the tax that's collected on gas. It doesn't matter if you have a car, you don't have a car. If you don't have a
Nope.
car and you don't have gas, this is just really free money. If you're driving a car and filling up and you pay tax at the gas pump, then you're getting some of that money back. It's a climate action. The money is supposed to be going towards climate issues the government's trying to deal with. $488. I think that's over, I don't know, is it 3 or 4? I seem to have
It's
only
4.
Is it
It's
4?
4. It comes from the Ontario government, but
government.
they've split that into 4 payments now. So you'll get that one quarterly.
Yeah, and then again in a partnership, $732. And also, if you have children under the age of 18 years old, it's the child Canada Child Benefit, Canada Child Benefit, and that is all subject. It's hard to give you an amount for that because it's subject to your own. Like there's a lot of different things, but you will get that up to age 18. And that's why it's great, because when you come into Canada with children and you fill out that R66, which we were telling you about when you first come as a first-time person into this country, you fill it out, and then after you've been here for a year and a half, you will actually be eligible for your children to get this Canada Child Benefit, and it can be a lot of money. It can be
It can be like 600 to 800. I think the maximum is like $800 or something like that.
per
So
per
it is
child.
quite-
Yeah, per
Yeah,
child. So it can be thousands of dollars if you have more than, several kids. So that is really important. Get that RC66. If you're coming in with kids, get it in the day and wait for a year and a half to be here, and then your children will be able to apply. Yes, all of you should be filing your tax return when you do reach 18. That's when you won't be able to get, and I always get this mixed up, maybe you're better at this, she's the chartered accountant, not me. One is at 18 and one is eligible to when you turn 19. Do you know which?
Yeah,
one?
so I think we probably have, this is more for the undergrads, because I think probably most.
Oh,
of our
that's true. All of
graduates
you are
over
probably, yeah, you're
18.
your graduate.
Yeah, but here in Canada, essentially what happens is as soon as you turn 18 years of old, you're considered an adult, and you can file your own return. Up until then, you do not file a return. So that's just the way it kind of works in Canada. So
Okay.
yeah, I think if you add all this up, I think I was at $2,000. Okay, folks. So if you are here for 12 months and you get this, gas rebate I call, then you could be over $2,000 a month. Okay, so that's
A
pretty
year.
good. If you're here for 4 years, that's $8,000. I just gave you $15,000. I just made you $23,000. But yeah, and just to sort of explain that, please build those into your budget. Essentially what the government is doing is they're collecting all of this tax money, and it's basically a redistribution of some of that tax for lower income individuals and families to offset future purchases. Do you know what I mean? So it's that's sort of the theory of it. So that 467 for GST is supposed to offset future 5% that you're going to pay. So that's the way it works, but please build those amounts into your budget. And if you are getting a property / rent credit, then you know what, use that against your rent. So I think, our advice is always to be intentional about this money when you start getting it, and, use it for some defined purposes so that it's, it's not free money in your account, like it's part of your budget.
Yeah, make sure you use it well. It's a great help for students too, who are really getting tight with money with all the cost of living and inflation that's going on right now. This can really help. So we see a lot of students who have no idea they're even getting it because it's coming into your account.
Bank account,
Yeah,
yeah.
and you're not noticing it, but you look on the 5th and you'll see the GST quarterly. You look on the 10th and you'll see every month your Trillium. So, yeah, so here are the dates. Do
I
you want
messed up this date too. It should be July 23rd to June 2024.
Oh, I fixed,
So the benefit period starts in July for the
Yeah.
preceding year. And that's just the way they do it.
yeah. And the same with the OTG, the Ontario
Yeah.
Trillium Grant. You're going to
Yeah.
get that from July 23rd to June 24th. And it's the 10th of each month. Okay, it's the 10th. And if you, well, you won't be living in residence, highly unlikely for.
No,
so
no,
let's not
no.
worry about that.
no,
So
let's
to
not
the next,
worry about
the
that.
climate
And we
action.
talked about that. Yep.
You want to do climate action?
Yeah, I think we went over
We
it
already sort of
already.
covered it. It's just a tax.
We already covered it, but
Yeah.
I think just the nuance that, you know, for whoever came, say, December 23rd and was not here for 12 months, you will not get
Won't
it
get
for
it.
that year. It's not even prorated, so they do want you to be here for 12 consecutive months. That is not true for the other benefits. They will prorate those benefits for the time that you're here and the time that you're not as well.
Okay, so
okay,
this
so
is
this
a
is
relatively new
important.
one, the housing benefit. You want to talk about that? You can talk.
Oh,
about
this is super important. So if anybody, and actually I was just thinking about this morning, because if you have not filed your 2021 return, okay, and I think we had an example of somebody who came at the end of 2021 but didn't file a return. Make an appointment with one of our tax peers, and if they need help, like we always assist them. But what we need to do is file your return. Because if you don't have a filed like 2021 return, you can't apply for this. This gives you potentially up to $500. $500, okay, depending on how much rent you pay and what your income was in 2021. Okay, and this is totally separate from the tax return purpose, from the tax return process. Guys, they just came out with this, and that's because rents in Ontario have just been crazy, and it's just to provide some relief. Okay, and you just go and you apply through that link over there, and if your rent is 30% or more of whatever income you had in 2021, you will get this free $500 payment, okay? So if you do have any questions, or if there's anybody at the end of this that needs to file their 2021 return, and you have to do it sort of quickly, and I'll tell you why, because the deadline is March 31st, okay, to apply for this. They're not going to extend it. But if we could file your return in the next week, like the next, you know, it takes about 2 weeks for them to send, like, to us, you know, to give you this report card, because remember, we do it on our own and then they check it, and they put their stamp of approval on it. You should be able to meet that March 31st deadline. Like we're right on the deadline now. So please let us know if you need any help to do that, okay? But this is just over and above. The government just came out with this, because folks have just been struggling with rent, right?
I just want to repeat one more time. It's on Oscar Plus that you can make this appointment. Go on
Yes.
to our our FinLit peers and book an appointment. There's spots open, so go ahead and try and get it done as soon as you possibly can. Okay?
Yes, and I think you were asking, how do you claim GST? You don't need any receipts. You don't need any receipts for anything. And that's why we sort of call this free money. And this is the tax credit. But yeah, great question. No receipts for sales tax rebate, no receipts for the GST, but receipts for the property grant or rent. Like if you own a house, it's a property tax credit. If you're renting a house, you know, it still falls under that property sort of, but that you need receipts for. This is cut off, but again, we'll fix this before we provide everybody a copy. But you know, this is I always
Oh,
call
this
it
is
the
what
best
you
kept
talked about.
secret. And I already talked about this, so just sort of keep that in line. We already sort of
About moving.
touched on moving expenses as well. And so we don't really have to go through that.
I'm just gonna go through.
And this is the CRA account, Terry, so maybe if you want to talk about this.
Okay, this is what we really highly recommend you do. And and Gina has already said, you have to file first. And once it's filed and there's been a notice of assessment basically issued, or then they are aware of you, then you can open your CRA account. And it's really easy to do. You can do it right when you're like on actually, and the software that we use, we can do it through. Can you do it through UFile? Because we can do it through Simple Tax.
I don't
No?
think so. No,
Okay.
you filed, no.
No, okay,
Um,
so you can do
So
it.
you don't have to wait for your notice of assessment, Terry. You just can do it right away as soon as you file, right?
I don't know.
Well,
I don't know. I haven't done this for a couple of years. You had to use, oh my God, you used to have to wait for the NOA. I don't know. I could be wrong, Gina. You
Okay,
know-
I think yeah, so I think you told me that you don't need to, so that you can apply right away for your CRA account. But anyways, we'll check that out and
Yeah.
then we'll
They
clarify
used-
that,
yeah,
okay?
we
We're just
used to
gonna
be-
verify.
Right, yeah, we used to be able to phone Revenue Canada directly and they would give you the code.
Yeah,
You need a
absolutely.
code to get
Yeah,
in, so you file, and then on the basis of the filing, they'll give you a code. And then the code comes within a couple weeks and you put the code back into your application form, and then you're able to see everything that you could ever imagine, that everything that Revenue Canada knows about you, you have open to you. You're like an open book at that
They
point.
know, yes,
know
they
everything.
know, they make it, the government does make
Oh.
it. Of course, if you have self-employment, like you're, you know, driving Uber and all that, no, they won't know about that. They call that the underground, but you are responsible to claim that money, okay?
Yeah.
So even though you don't have a slip for it, you're responsible for it. But yeah, you know, all the information that they gather on your financial situation is all sitting in this account.
It's all sitting in that account. So, but you have to wait to get a code. That's why you have to wait. So we used to be able to phone them, and on the phone, they would give us the code and we could put the code right back into the software, and up you would have access. But I don't know if they're allowing that, especially with all the stuff that happened in the pandemic. They probably couldn't have the phones open to get a code. So now you have to fill out the application form and you send it off to them. And then about a couple weeks later, you get the code in the mail, and then you put the code in, and we'll tell you how to do it. We'll show you how to do it. It's just really important that you know that there's such a thing as a CRA account. You can apply for it, and we highly recommend that you do it. One of the greatest things about it, on top of all the things that Gina has said, is that when you get information from Revenue Canada, it's only going to come now through the CRA account. So there's never a worry that when you get something on your phone or your email from CRA, you know that it's a scam. Because now, once you've got a CRA account, Revenue Canada will only deal with you generally right through your own personal account. So it's a very safe way of always knowing that you're dealing with really the government and not a scam. Okay, just
Yeah,
gonna.
it's a very,
Oh, here's some scams.
yeah, it's a very secure portal. And the other thing, I don't know if we also reminded, and I'm gonna remind all our volunteers, we'll talk about how to get help. But when you're filing for the first time, guys, don't forget your bank information. Because if you are coming to one of our free tax clinics, you know, and we prepare your return for you, like we could do that, say your first year, a lot of students will come to us for the first, we can actually put your banking information in there. Terry, if they set up their own account through Wealthsimple, can they put their banking information in there?
Yeah, I think so. You know
Okay.
what?
So
I think-
that's, yeah, so
I
I
have
know
to check
for
on
you-
that.
Okay, so because we are volunteers under the, it's called the Community Volunteer Income Tax Program, we're all screened by Revenue Canada. We have to have police checks. We have to be registered. We have to have our own CRA account. So we can actually change addresses right on your return. We could actually include your bank information number, which I highly recommend, because if you're waiting for a check in the mail, it could get lost. And so we could do that right away. And it's a lot easier to do it right when you're filling out your return, as opposed to then filling out a form by hand and then having to mail it, okay? So just remember that. That's a good FYI. Beware of
Sorry, I'm just going to interrupt for 1 second, Gina. I'm just reading something that you face saying that there seems to be some confusion among how the benefits work. Do you want to like?
Terry, this was from a few slides ago. I was trying to get your attention before we moved along. I feel like because we were talking about rental receipts earlier, and then we moved on to the GST. So students were asking about, gathering receipts or for that. So I just want
Okay,
to
so it's already been answered.
It's been
yeah,
answered.
no receipts,
Okay,
guys,
great.
for
Okay, okay,
GST,
great, okay.
no receipts. And yeah, the sales tax part of the OTB, here goes the lingo again, but once you hear it and you'll remember it, no receipts. So yeah, and the gas tax, gas tax rebate, no receipts. The only thing is for rent. That's it. That's all you have to remember, okay? It's only the rent.
Do you want
to do tax scams?
Well, I just said that essentially this just basically says they will never call you. Revenue Canada will only go through your CRA account, and if you don't have one, they'll mail you anything. They do not phone you unless it's already prearranged from an earlier conversation with them. So do not, if you get an email or something in the mail or anything that says, you owe us money, you got to pay, whatever, it's garbage. Just delete it, throw it out, just ignore it. Do not respond to these. Never, ever give out.
The other text message you might get is, oh, you've got this amount waiting for you from the CRA. Please press this to make your deposit. No. And you might think, you know what, and scam artists, like, they're just so clever, right? Because they probably send this out to like millions of people. And you might have just filed your return like about a week ago. So you're like, oh my God, they've already looked at it. Like, they've already got my money. So, they get us at the right circumstance. I got one about Rogers. I was just telling Terry and the peers over here, and I was like, oh my God, like, I actually have a Rogers account. And I was actually away. And so they were writing me this, and I almost kind of got suckered into it. And I was like, wait a minute, like, this is a scam, right? But it's like, okay, yes, we're aware that you were away, and would you like to sign up for this? And I thought, yeah, I was away. So anyway, it's just a matter of chance and circumstance. If you had never filed and you received that email, you received that text mail, you'd be like, yeah, this is a scam. I didn't even file anything. So anyway, just be aware of that. Never share your social insurance number. Your social insurance number is your own personal identifier. Nobody has that matched with your name and your birth date. Never include that or share that, okay?
The only thing I do want to say is if you are going to open a savings account, the bank will absolutely have to have your social insurance number. So you go, but you know who you're talking to at the bank, or you're in there in person, so that's okay. But in order to give you your T5, that slip on investment income or savings income, whatever you've gotten, the banks have to know what your social insurance number is. So, there is the odd time that it's legitimate to give it out, but by and large, you don't. Certainly not unless you're talking with like someone at the bank or something like that, like some institution that you know and trust. Okay.
Yeah, and actually just talking about phone numbers, because this actually, I never could figure this out, Terry, because the CRA always says, like, we will not call you, we will not call you. But when you're filling out your tax return, it asks for your phone number. And so I thought, well, that's so odd, because they'll never call us, they'll never call us. They'll write us a letter. And then we may be required to call them on, are required to call a specific officer or whatever that's looking after it. So my advice is don't share that phone number.
Don't do that.
Okay, don't indicate, it's not mandatory, okay? So do not include your phone number, do not include your mobile or whatever. And I have no idea why they continue to ask for that, because they really don't call us, okay? And if you put your number down and you get a call, you might think, oh, well, I shared my number. Okay, so again, it's just to protect yourself against scams.
The free tax clinics, just really quickly, we are running tax clinics. So there's two ways that we can help you do your taxes, guys. One, if you're really interested in learning how to do it yourself, then we have 3 DIYs throughout March and 2 in April. Sorry, there's 3 altogether, and we will
Yeah.
actually, the first part you don't need to come to because you've just heard this here.
Yes.
It's an explanation of the tax system, what we've just done with you. The second session is we actually go through we use Simple Tax. We go through it. We're standing at the front of the classroom going through the software. You bring your computers, you bring all your slips. We've got volunteers walking around the room to help you. And the goal is by the time, hopefully you leave that session, you've actually submitted, we've helped you submit your income tax filing, and you've done it yourself. And then the other one are we're using the Revenue Canada's actual volunteer software. It's called UFile. You will bring your slips, but somebody is actually filing on your behalf. So it's a difference between, do you want to learn it and do it yourself, or do you want someone else just to do it for you? Boom, it's done. Okay. Do you want to?
Yeah, so here it is. Yeah. So and I just wanted to add to that as well. We covered some major areas that we'll be reviewing after you finish your tax return. We'll go back and we'll review income tax refund, for example. That's the one major line. Are you getting a refund this year? And if you've not paid any taxes, you're likely to be 0. Okay, so remember, that's an overpayment, or do you have to pay taxes, which would have been, an underpayment. You didn't send, or the employer didn't send enough contributions on your behalf. They didn't take enough off your paycheck. Then we're going to actually look at the benefit schedules. So that's why we really wanted to explain to you, the GST, the OTB, which is from the Ontario government. Sorry, guys, we have 2 levels of government. And so we have 2 levels, but thank God we can do it all in one tax return. And so we're going to be looking at, what did I get back for rent? What did you get back for sales tax? What did I get back for GST? I was here all of 2022. So, that's what I got, from the Climate Action Incentive Plan. I don't really know what that means, but I do, in my mind, it's the gas rebate. That's what I call it. And so we're going to show you where those schedules are, because really that's the bottom line, right? And do I have my tuition recorded properly? Okay, because remember, if you stay here and you end up working here, you're going to get a tax break. So it's regarded as, it's used to reduce future tax liability. Versus the benefits, it's just free money today. It's free money. So I hope that's simple.
Right. So someone just asked how they get on to Oscar Plus. Where do they look at this? So if you go on to Oscar Plus, guys, you go on to Max Money Center. Okay.
Yes.
And
under events, SSC events.
And then, it depends. If you want to do something with the peer leaders, you're going to actually book them on Oscar Plus. So if you're going to meet with one of the peer leaders because you want to do it, you want to make an adjustment, you want to go back to 2021 or previous years, you can see our peer leaders, and those people are on Oscar Plus under Max Money Center, and you look under appointments. If you want to do the 2 do it yourself or the tax clinics that we're doing, we're going to do it for you. They're under Max Money Center again, and it's under oh my goodness, events. No, I guess it's under events. Look under events and you'll see the tax appointments or the DIYs. It should be listed there, and then you sign up there. So if you're having any confusion, just let us know. money.mcmaster.ca.
Yeah, just email. Yeah, just email money@mcmaster.ca. And just again, a clarification, okay? the Finlit peers, that's what we call them, but our support staff here, they've been trained. They will only assist with previous year's returns, okay? And especially if you want to get, if you want to apply for that housing benefit, right? So if you were eligible to file in 2021, but you didn't, make an appointment right away, okay? So that way you can apply for that potential $500. You know, I mean, it's money out there. So I tell students, if you're eligible, try to get it. And so we have them helping with previous years if you want to get that done, okay? They will not assist you with 2022 returns. You either have to sign up for one of the 3 do-it-yourself sessions or one of our volunteer clinics, our free tax clinics, okay? We're offering those to students, to students of McMaster, yes, and we're also actually in the community, okay? So it's like a big volunteer program. We have like 80 people on this program, so it's a huge program. And as part of that program, we help McMaster students, so we'll do your return right on the spot and give it to you, and we also go to the community. So just to clarify, okay? So not for current years. Not for 2022.
Yeah, you have to make use of these DIYs or the tax appointment or the tax clinics.
Yeah, come, it's so fun. We get a lot of grad students at the DIYs, right, Terry?
Yeah.
Grad students just want to do it themselves.
We really think it's important too. I think Jean and I would really feel it's a part of learning to be a financially literate person. The more you understand, you know, taxes is just an important part of just understanding your financial life. So actually, as much as Gina's volunteer program is awesome and they'll do it for you,
yes,
do it yourself is really a learning experience as opposed to just having it done. So if you've got the time and you want to learn, come to the DIYs.
Yeah, no, I think that's excellent.
And I think we're basically,
you know what, it's a great way because a lot of students will reflect on their T4 and be like, oh my God, right? I didn't know they took all this money off, or what did I do with all of this money? But yeah, it's really about understanding, you know, your gross pay, your net pay, where's that money going? What money is available to you? And I think that's super important to understand your financial, and then budgeting for those benefits. That's the other thing. So that's it. I don't have anything else. I know we still have 20 people on the call, so thank you so much for staying with us.